All right, and first things first, can everybody hear me loud and clear? If you can, just drop a yes in the chat, thumbs up, whatever it is. Perfect. Perfect, perfect, perfect. So, to begin, I want to welcome you guys again. Thank you all for attending our Wednesday market recap. It's really, really, really it means a lot to me that you guys, spend some of your evening with us here. So, as you guys know, today was an extremely, extremely, extremely volatile day in the marketplace, but not in a traditional sense. We didn't see the seven Vs that we saw yesterday or the day before. Um, but what we did see instead were massive, massive volatile movements in either direction. Okay. And what we're going to look at first is our old favorite, SPY. We're going to look at SPY on the daily chart. Okay. Because there's something very important I want to highlight. Now, a lot of you guys may know that, okay, we opened up an insane run right off the top because of CPI. CPI came in significantly lower than expected, and the market reacted in a positive way. So this is actually some of the best CPI news we've gotten in months. Whereas the previous 2 months, we actually opened flat. I think last 2 months was 0.4% expected, 0.4% reported. And this month we were actually significantly lower. So that means that gave investors, hey man, we're gonna be pumping the markets now. We're excited. And it's evident by the jump we had. We closed yesterday about 439. We opened today at 445, I believe. So and we're just going crazy in pre-market. I mean, those of you guys who held some Microsoft calls from yesterday can attest those were up very, very nicely on market open today. In part because of the reaction to CPI data. So, as you all know, I got out of the majority position of Microsoft prior to market close yesterday and left two runners, and the runners ended up returning twice as much as what I got with the the five contracts that I sold yesterday. So, crazy, crazy way to start today, right? We hit the call levels right off the bat. SPY actually topped off around 447, 48 prior to a drop off. Now, what happened then? Because when this happened, everyone and their mother is probably like, oh man, it's nothing but calls, nothing but calls. We're way above EMA levels. We're trading real high. And I believe I saw several people in the chat saying, hey, stock's going to go up. They're not going down. We're not getting the V, we're getting a straight line up, right? It was a pretty exciting day. And around 1040, I was getting real bearish, right? As Ben, for those who don't know the chat, Dog City in the Discord server, he could attest. I was calling out. I was like, yeah, I'm favoring some downside here. I had taken the IWM puts around that time, and we are gonna see what happens. All right, we're gonna take a look at what happened because from a normal person's perspective, we are seeing a rocket to the moon, and we're talking about potentially seeing 450 on the on SPY before the end of the day, the way it was going, right? So what happened that made me shift to puts around 1040? Let me see what the exact time stamp I was, just to give you guys a little bit more clarity on what I was looking at. So 1054 is when I first said I'm favoring. Once we lose the 50 on SPY, the 1 minute, we're going to see a drop to down below 446. And then about 10 minutes later, I said, I'm thinking mid 446 is soon. I may be wrong, but that's what I'm thinking. And then following that, 3 minutes after that, I said 446.78 is the next key level support. And once that loses, we're going to drop below 446. Okay. And favored more downside levels. So what was giving me those indications as to favoring the downside when conventional thinking would be like, hey, stock market's going up, we're going up, and that's all there is to it. Well, this is where we get into, and I know I've said it several times in our market recaps, but we have to look at multiple time frames for our confirmation. Okay. Now, it's going to be hard to see here because these are not the dynamic RSI bands. These are actually static. So these are adjusting for where we finished at the end of the day versus where it was at that time. But the markets were severely, severely overbought. Okay. Now, of course, when you have an influx of buy volume coming in with very low sell volume, you're going to be overbought in any time frame. But what got me thinking was, okay, the 1 minute is just at the overbought line. The 5 minute was trading a little above the lower levels of, the upper levels of the RSI band, right around this time. And then the 15-minute was where I got my clear confirmation. The 15-minute at the time of me saying, hey, I'm favoring support downside here, was so far above the EMA levels, right? You got to see a bit here. Was so far above the RSI buy/demand zone that I'm like, this is not sustainable in any way, shape, or form. We're going to see a drop, and we'll probably see a significant drop, right? I was thinking 440, like low 446s, high 445s. What happened was, once we broke through this level, which on the 5-minute chart was actually where the EMAs were consolidating, right? At this point in time, it was the EMA 50 and the EMA 20, which is being retested. So once we lost the 20, we immediately retested on the downtrend. We didn't break above that on the 5-minute and lost the 50. And once we broke the 50, we also broke the 60. Okay. And when we broke the 60, it was a free fall, right? All the way down, because the 200 was down here at the time, right? And that's where the ticker was looking at. So when I said I was favoring downside, it was because I was looking at the 1-minute, the 5-minute, and the 15-minute, and I saw that the RSI levels were so far above the average levels, or where a ticker would normally want to be for a continued push towards the upside, that I was like, okay, I'm gonna favor downside here. And we saw what happened. We ended up dropping all the way down from 447.38 at the height, or 447, 447.38 at the height, all the way down to 444 before we got a bounce back. So that big V is where we got the when I alerted IWM puts, and then they went up 20% within 7 minutes. And then literally 20 minutes after that hit 20%, the ticker hit 158% because we got that massive sell candle, as you can see here. So that's on a 5-minute chart. Let's look at what that looked like on the 1-minute. Look how steep of a drop that was. We completely lost all levels of support, dropped all the way down. Again, the candle closed. This was an insane drop. Like I said, hitting as low as 440, 490, I believe, was the low of the day at the time. This should be the right time. Oh, here it is. Yeah, you're right. Thank you, Ben. Pointing at the wrong thing. So we get this here. This is where the drop out. We still lost 200 and 444.91, like I said, which was our low of the day. So again, lost all levels of support here on both the 1, the 5, and the 15. RSI levels are completely overbought at the time. And you see what happened to the ticker, right? Now, does anyone have any questions about what I was looking at on the on SPY? Yeah, we bullish for tomorrow. Well, with PPI coming out, it's gonna be a little bit choppy again. But generally speaking, when CPI is so positive, there's usually a continuation. However, you saw that we had a bit of a retracement on like some of the tickers that were trading hot on the market today. Like for example, Carvana saw a significant pullback, which was one of the hottest runners of the day today. So overall, like I said, when I would lean more bullish yet again, because I think that we had that massive pullback that we needed, because that pullback was necessary. Because there's no way that we were going to be continue riding the way the trend was without seeing some sort of sell-off, because the market doesn't like to go up that rapidly, right? The actual physical trigger for the put entry on the overbought thesis was what? So going back to the 15. So I was looking at it on this overbought thesis here. And then on the 5-minute, we were looking to lose support on the 50 and the 200. Does that make sense, Ben? Yes, because once you broke the 50, the 200 was the next closest support, and that was $2 down from where the 50 EMA was at. And that's why once it broke the 50, we just had a massive drop. Now, if I'm being honest, I didn't foresee that kind of drop. I'm thinking, okay, we're gonna get a drop below, and I was expecting we're gonna get a little retest bounce near the initial market open, which still would have been a nice little bit of profit for the puts that I alerted, because IWM puts hit 20% at that time. But once it broke, yeah, the 20 and the 50. It was a 20 and 50 on the one, by the way. Sorry. 20 and the 50 on the one. Yes. And then off the 15-minute, it was RSI, because that was the RSI on the 15 was a confirmation that we were extremely overbought, because we were trading over the RSI limits on all of them, on all the time frames, the 1, the 5, and the 15. But because the 15 was so far above the demand zone, that I knew that that wasn't sustainable, because there's no way that we trade that hot without a some sort of retracement back to a normal level. But that's where we get to the point where I'm saying we got to look at multiple time frames. You guys understand? That's why I think you were actually saying something in the chats, Ben, about you were looking at a call entry when we had some more downside. And you said, you know, TR's favorite downside, so I don't want to go against him. Besides, there's only one confirmation that you saw on that piece at the time. And then, you know, that one confirmation could have turned out badly had you entered. You know what I mean? Because it went the opposite way. So that's why it's very important to look at multiple time frames to get those you don't want to have confirmation bias, just only looking for things that are going to make your thesis right or wrong. But you want to make sure that you're looking at things that, if they play out the right way, that signals that your thesis was on point, right? And I mean, I was pretty adamant in the chats about being very, very bearish. And I know, like you said, you saw I was on it for at least an hour and a half before we had the drop. So that's the key, guys. Just looking at the different levels of support and resistance, where the next key area consolidation is, as well as what's going on in the market. Are we super overbought? Because, you know, stocks, very rarely do we see a run up where we go up $7 on a day without some sort of pullback. Okay. And like I said, even on tickers like Carvana, which is a meme runner, it had an insane volume push, and then all of that dried up real quick. Which actually brings me to my last thing that I saw on the chart. Okay. So this is actually going to be on the 1 minute. All right. So another thing that led me to be more bearish, in addition to the overbought levels on the RSI bands, was, do you guys, or can you guys see what I'm circling here with the mouse? If you can't, let me know. If you can, drop what you guys think this is in the chat, please. Yes, exactly. Not the moving average downtrend, Raju. That's actually a good guess though. But the EMA's curling was a direct result of the volume drying up. Okay. Now look at this drop off in volume. Look at what happened on market open and the significant increase in volume here, right? But what happened here? We're getting a bunch of buy volume coming in, then it starts to slowly dry up. Now, when it's drying up, what's also happening? RSI is cooling off a little bit to the point where we're getting a push towards the upside. We actually reached high of the day. That push was solely on low volume, right? You see the size of the candles? A low volume push up to higher of the day. When I saw that, in addition to the fact that we were already so overbought, I'm like, all right, cool. We are likely going to see a downtrend. Now, I would be lying to you all if I said I foresaw us going from 447 to 444 in that time frame. but I did, and you guys can check the chat history. I was like, we're going to see low 446s for sure at this point. And yes, Ben. So that was actually, you had sent me a DM earlier as well. That was the answer to the question that you sent me in the DM. So I'm glad that kind of offered some more clarification to you. But now do you guys kind of understand what my thesis was and why I was so bearish when everything else would indicate, hey, I'm going up? Perfect, perfect, perfect. Now, before we go on to another ticker, do you guys have any questions about SPY, what happened today? Because I know the like I said, a lot of you guys are saying, hey, why were you saying, favoring downside when, we're calls are going up and stocks go brr, right? Stocks are going brr all over the place. But I like to think that I can read a chart a little bit. So I think that was the biggest thing for me, was the confirmation of the volume drying up, coordinating with that low volume push, equaling the oversell, the overbought position, meaning that we're gonna have a sell-off. And then once the EMAs kind of consolidated here, it was we were in no man's land at that point. But this huge drop, again, I didn't expect this candle. I expected these candles, not this one. So I don't want to pretend like I'm some chart reading wizard, but that was my my thought process. Right. Finance girl, yes, I will look at the NIO chart in a moment. Because one thing I also want to look at really quick before I get into that, I want to look at Carvana. Okay, because that was the other fun name of the day, right? Now, as I stated earlier, for those of you guys who were not on the call at the time, I actually did not personally take Carvana, just because for me, I looked at it and I was like, I didn't like the contract prices from where I was going to get in that, and I didn't want to feel like I was chasing, so I kind of sat it out. But just to kind of give you guys some analysis into it, right? Look at this insane run. We opened up at $35 per share. And we shot all the way up to 44.60 on the day, right? Yes, Ace. I didn't get in because I'm a hater. I don't like you. That's why I stole SPY from you today. It's okay. We call it an even trade-off, right? And I got my 158 on IWM. I'm not mad about that. But again, with Carvana, do you guys remember what I said on Monday when we were looking at the same chart? And I had said something about meme tickers and something that they always like to do. Let's see who remembers who was paying attention last class. I'll give you guys about 10 seconds, then I'll jump in. All right, Ben. So you can't remember. I'm sure everyone else was silent. They can't remember either. But what I said about these short squeeze candidates, also known as meme runners, the biggest thing that they always follow is you want to look at the incoming volume trend, because with these, the biggest things that are the catalyst for the pushes is FOMO, right? And we actually saw that around 2 p.m. today, where we saw the spike from we were at $40.60 all the way up to 44. Look at this candle here. We're going to zoom in here. This right here, this time frame is insane. This is a 5-minute span where we went up $4. Insanity, right? And I actually said something about it in the chat. I said, yo, the volume indicators on Carvana are going nuts right now. Something along those lines. Because it was just people piling in. for fear of missing out. Well, what did that do? Once we topped out, we saw an immediate retracement back down to the lower level of support, which is the 200. Couple that with the RSIs being oversold. This is a simple thing. When we see a sell-off of this, who can tell me what this is usually an indication of? A sell-off of this magnitude after a run-up like that. Exactly, Ben. Profit taking. Not a reset of RSI, Martin. It's profit taking. Because you got to remember, this is a ticker that's running solely on retail traders piling in. So for those of you who don't know, who don't track overall volume on the ticker, Carvana saw over $50 million worth of volume. That is astronomical for a stock that's only $38 per share at the time, or it was $40 per share. Not a lot. Open up 35, right? 45 million in volume, just to give you guys some example, and actually it finished at 73 million in volume today. To give you guys some perspective, SPY on average for the month of May saw $70 million volume. So imagine that SPY's share price is $446. Over 10 times as much as Carvana's. And its average in the month of May the month of June was $70 million. And Carvana saw that. Now for SPY today, SPY saw almost $100 million. I think it was 92 million. But that was purely as a result of CPI data and the bull rush that we saw, followed by the massive sell candles as we retested our previous supports on SPY. Now with Carvana, once it topped out at 444, I want you guys to think like a retail trader, because that's what a lot of us are. We're retail traders, and the majority of retail traders be like, hey man, if I bought $30 calls back when this was $22 2 weeks ago, and I'm at $44.64, what am I going to do? Or what would any sane person do? Exactly. We're going to take some profit because, I mean, think about it. If you get $30 calls, you hit 44 and you bought 10 of them, you're up like 10 grand. So, I don't know about you guys, but I mean, if you wouldn't, please tell me you wouldn't in the chat. But who wouldn't take $10,000 if they have sitting right in front of them? Okay, cool. Nobody's typing, which is something I like. Well, hey, diamond hands is one thing, but diamond hands turn cold real quick when that pressure gets on them. Well, I'd like to say everybody would take it. Hey, listen, I've known Ace a very long time. Ace is a very smart man. If he won't take it right away, you know what he's doing? He's putting his stops right at that level. So if it drops below it, he's going to take that money. But anyways, I digress. So back to Carvana's chart. Who can remember? Because I know a lot of you guys are going to ask, are we still bullish on Carvana right now, even though we saw this crazy retrace back down to $38 per share after the profit taking? Who remembers what the level I identified on Monday as the key support? It's not a trick question. This is actually it's a simple number. I'll let you guys get a couple of answers in there. All right, we got, let's see who got the right answer. I think I saw it in here. We got one person with the right answer, and they actually clarified. Correct one gets to get on the wheel. I like that. I like that, Captain Stock. I like that. All right. So the correct answer is by Mr. CK2. $34 and holding the 60 was the important line for Carvana at that time, right? So let's look at it here. On the daily, we lost all the EMA, lost all the EMA support. Let's see what we look like here. I mean, this is the 1 minute chart. I'm sorry, not the daily. Looking at the daily. Still seem to be in pretty good shape on the daily. But what else do we have here on the daily? Let's look at the weekly chart. Now, this is where stuff gets a little interesting. All that movement we saw today, when we broke above this level on the weekly, which was the EMA 60, we're still right there at that line. What happens if we break past the EMA 60? What's the next area of support? That EMA 200. Or resistance, I should say, not support. So if we get a breakout on Carvana past our EMA 60 here, 39.50, we could likely see a $50 Carvana. Yes, I know the EMA is at near $100. I think it's $95, Ben. But you also want to be realistic. That would be a GameStop level move going to $100 from where it's at right now. It's not impossible, but we want to play some probabilities here. We don't want to be gamblers. We want to be traders, right? Trader twos, not trader ones. So taking that into account, if we're holding $40 calls and we hit 55 and we never see this EMA 200, would it be smart to hold until we get to that 200? Or are you going to cash out those $40 calls at 55? Yes, and yes, finance growth. The weekly RSI is overbought. However, with meme runners and short squeeze candidates, that RSI doesn't tell the whole story. Okay, if you remember, like if you notice, even when I was talking about the daily on the 1 minute chart on Carvana, I wasn't even mentioning the RSI or the RSI bands. It was all about the volume. It was all about where we're EMA consolidation. That's where the next key areas of support and resistance are. Because with a ticker like this, which is fueled purely on FOMO and short interest, the RSI means nothing, because an influx of volume like we saw here at this time, look at this volume chart. Look at that. This size of this candle, this one candle had more volume come in than the average for the rest of the entire day. Going up $4 on a share price in 3 minutes is going to be that'll do it. So that's why RSI is something I'm not really paying too much attention to it. Yes, Martin, short interest is very important because that gives it's not a catch-all metric, because that's just the likelihood of a squeeze, right? The percentage of a squeeze. And with the short interest, you can see that like Ortex data and things of that nature, if you have access to Ortex data. But on a meme runner like this, those things are what we're looking at, because that's the likelihood of retail traders all piling in, like we saw Carvana here. Now remember, literally a month ago, Carvana was like $11 per share, because it had a small run back in March when it got up to $30 per share. Let me go back. I'm sorry, moving too fast for my time. And back in March, it hit $30 per share, retraced all the way back down to 11, and now we're here at 44. That's an insane volatile run. But as long as the company itself has positive press, and if they're able to meet the expectations, which was the catalyst for this run and this influx of buyers from the retail side coming in and FOMOing into the ticker, if they hit their price targets, like they said that they're going to be profitable, they are going to drive this up. And then once the shorts cover, they are going to drive this even up, and we can potentially see that $95 EMA retest. Yes, momentum. We got to see what the shorts do, but you want to be careful, because the biggest fear with meme runners is the fear of what, guys? What's the one thing we don't want to see on high short interest stocks? This might be a difficult question, but if you guys were trading Bed Bath & Beyond and some of the other meme runners over the last few months, the answer should pop into your head. Yes, sir. Yes, guys, you are correct. That is the one fear I would have, because if we pile into this ticker and we're like, oh man, we're gonna see $95, you buy in late and they hit that magic word, we're gonna do a stock offering. What's that gonna do? It's gonna kill the value of the shares and you're gonna get burnt bad. Exactly, Ben. When a company has a lot of debt, well, Redbox is a little different momentum. Redbox was a merger and acquisition. When it merged with Chicken Soup for the Soul, and that kind of screwed everybody over because the merger had it valued at like a fifth or a tenth of the price. It was stupid. And yes, I'm a little upset because I was in Redbox. Oh, they did do an offering pre-merger. That's neither here nor there. Oh, okay, yeah, you're talking about the first time. I was okay. Uh yes. Okay, Ace. I wasn't in Redbox at that time. I was in it after. I was in it with the Chicken Soup merger, and that's what kind of burned me. But it is what it is with that. So that's what I say, that for you guys to just be cautious, just to be cautious with that, because that you don't want to chase and get stuck. But if you're going to participate in something like Ace gave a lotto on Carvana for Friday's expiration, lottos are just like what they're entailing, their lottery tickets. Do it with house money that you can afford to lose, and if it goes up, great. If you lose, don't hurt yourself. And yes, AMC did many offerings there. It was but with AMC, it was weird though, because AMC as a company has a weird relationship with its investors, like the board of directors and the main group of retail traders who call themselves the apes. They don't like each other, and it's a weird dynamic. But that's neither here nor there. But anyways. So we're gonna look at one more ticker, guys. I'm not gonna hold you guys too much longer. I know I started late, and we're gonna look at NEO. So Miss Finance Girl, you asked a question about NEO. You specifically asked, I'm sorry, I'm trying to find your question. You just want to see the NEO chart. Okay. Now, was there anything specific? Okay, you want to see what to expect. All right, excellent. You answered my own question for you. All right, so we're looking at NEO's chart here. Okay. So with these electric cars and EV vehicles, right, they tend to mirror each other in a sense. So if you guys remember, NEO, a lot of times we had some sympathy plays with another EV maker, Lucid. So if you look at their charts, Lucid, NEO, and we're going to take a look at Tesla as well. Okay. Tesla, not so much similar, but I want you, what do you guys see here? You see NEO's chart? Take a mental image of that and look at Lucid. Pretty scarily identical, right? Yes, no, maybe so. Am I seeing things? Yes. Yes. So as A says here, A says in the chat for you guys, 1124 needs to break on NEO, right? Why is 1124 such an important level? Well, look at where we had these consolidations at. Been topping out there pretty consistently, right? Let's look at the 5-minute chart. Where are we double topping at? 22. Let's look at the 15. 1122 seems to be a key area of resistance, but let's take a look and zoom out and look at the daily. Ooh. Now that number makes sense, right, guys? We break past 1124, and what does that indicate? We're going to get a volume push towards what? Let's see who's paying attention without me highlighting what it is. Exactly. Break past the 200 EMA, we might have a clear sky break. But one thing I would caution with NEO is that we are dangerously close to being oversold, or overbought on the daily time frame, right? Now, with dailies being overbought and oversold isn't as significant as it is on the 1, 5, and 15 when you're day trading, but we likely see a retracement back down to the midpoint between the two levels if we don't get a clear break within the next 2 days or so. But if we do get that volume push and we're able to break past the key area resistance, which has clearly been a major layer of resistance, as evidenced by the daily chart here, then we all likelihood will see the $13 price point on NEO. So does that answer your question, Miss Finance Girl? You're very welcome. Very welcome. Ace, Ben has a question for you in the chat. If you wanna, I don't know if you wanna type your answer and then answer that one, then I'll get to the we'll have this be the official Q&A portion here, and then we'll do 4 questions after that. Just because, like I said, it's getting a little late for you guys. I don't want to hold you too much. And I actually have answered a lot of your questions throughout the chat. So Ace, if you can give Ben an answer, and anyone else who has a question in the chat, please feel free to drop it and I will do my best to answer. So we're gonna do 4 questions after this one. Daily RSI is important, but it really depends on the ticker. Like, for example, the Microsoft swing I gave. Let's look at Microsoft really quick, okay? Now, the chart's going to be a little off simply because of what happened today. But let's look at the daily chart on Microsoft. And I gave the alert yesterday, okay? We are still within the demand zone, and we had plenty of room toward the upside, which is what my anticipation of the play was, right? Bought in here on the daily. I had an anticipatory move towards the EMA 20, which would have put us deep in the profit because the calls were set at 332.50, right? And the EMA 200 at that time was 332.47, and it was 331 when I alerted the swing. Now, not only do we break past that support level without blowing by the oversold area on the RSI chart, we blew past the EMA and Microsoft went bananas, right? Okay, I understand what you're saying. You like the Microsoft thing because it wasn't overbought. But again, it really just depends on the ticker. Because we're gonna go look at NIO one more time, or NEO. Calling it NIO. So we're at the upper levels of the RSI band. We're literally right there at the levels. 70 is the key for being overbought, and we're at 70.07. Right. So when you have 1 second. Sorry about that. So when you're looking at the RSI bands on the actually, my friend, let me not step on Ace's toes. I apologize. So for those of you guys who don't see it, Ace said, I'll be scaling into NEO. I suspect we'll break 200 shortly. RSI is a great indicator, but it's definitely not an end all be all for my swing. Okay. So the key with a longer swing like this, and what it seems to me that Ace is playing, is a volume push, also known as a momentum swing, right? A momentum push. Because if and when NEO breaks this key area of resistance, the RSI band on the daily being overbought is going to be a moot point because there's going to be so much volume coming in that the swing is going to play out in their favor regardless, right? Now, looking at a ticker like SPY. SPY has been overbought on the daily pretty much the entire month, right? But does that mean it's not a good area to have some swings? So like, for example, if we had alerted, let's say we bought call swings right here were way overbought, we still would be in the profit. Does that make sense, Ben? Yeah. So the RSI, while it's important, you've also, that's where it comes in. You want to marry different indicators to your thesis to make sure that you're not being biased towards one or two specific areas of a chart. But for Neo, like I said, I think that's purely a momentum push, because in the past the ticker has seen swings in volume to the upside purely based off of a huge influx of volume coming, kind of like we saw with Carbon. Bullish gets ignored. Yeah, but remember, we were in a downtrend on SPY for a while. We were still overbought. You know, like here being three consecutive days of lower levels, and we still overbought, and it kind of didn't make sense. But then again, this year has been an interesting time for the market. But I understand your thesis and your concerns, because that's very, very valid, especially as someone who likes to have multiple confirmations of my own thinking before I jump into anything. So I don't blame you at all for your thesis. I was just kind of explaining what Ace was likely looking at when he on that play specifically, and to answer Finance Girl's question a little bit deeper. That's kind of why also I didn't take Carvana. You know, premiums are high. I didn't really trust my analysis on them. And look, if I took it, it would have worked out. Don't gas his head up. Don't make his head even bigger than it is. He's probably looking at his phone right now, like, yes, they love me. They love me. But let's not pump him up any more than he needs to be. Yes, I'm hating Ace. Just before you type it in the chat, I'm hating. All right. Anybody else have a question? Anything else? Anything about SPY, Carvana, another ticker? That one the question went a little longer than I anticipated, so I'll probably do one or two more here. All right, Sloth Bay. Sloth Bay asks, I bought Google July 14th, 120 calls at 11:39, average down to 11:50, but got spooked and folded by 12:15. Would love to see how you may have traded the price action with EMA 20. So let's look at Google's chart. Now, you guys know I love Google. Now, was it Google? Was it GOOG or GOOGL? Was it Class A or Class C shares? Okay. So GOG, Class C. All right. So took 120 calls for July 14th. 11:39. So let's look at the time frame on the 1 minute chart. Okay, so you actually took that call right in the middle of the massive downtrend. So my question to you, Sloth Bay, is what was your thesis for entering calls at 11:39? Tell me what you were thinking, just because this is a massive downtrend. Huge selling candles for over 24 minutes. And me personally, I would not have entered calls until I saw that we had a clear double bottom, which we ended up having here. We had a triple bottom at this level, and we ended up seeing a bounce back up towards the upside once we got past that. But I want to know your thesis for entering calls at that time. Okay. So so when the price stalled, I don't know. For me, again, I would have looked at the EMA test here, and we saw that we had broken below all the EMAs. That would have indicated to me that we were likely going to test the next key area of support. which in this case would be the EMA 200, which the ticker actually did. It actually fell below the 200. So I would not have entered calls until I saw how we interact. Now, if we bounced off the 200 and retested the 20, I would have seen, okay, we reject off the 20 or we get a close pass. If we got a close pass it, I would have entered call that level. But because we did not, this would have been a trade I would have sat out until I saw a confirmation that we were going to have some sort of upside swing. Likely, once we lost the 200 here, I probably would have looked at maybe getting into some puts. Or even when you entered at 1139, probably taking a put entry here. And then that would have given you some wiggle room, because if the put, let's say the put had a bounce, we would have retested this level here on the EMA 20. And if we broke out, you probably would have been out maybe 10 to 12%, right? Which is not, it's enough to be stopped out of a play, but nothing that's going to hurt a position. Or if it played out like it ended up doing, you would have been up significant amount because of how close the retest to the that previous EMA support was. So again, in my estimation, I would not have played Google calls at that time. I would have waited to see some more confirmation on different time frames, because this is just on the 1 minute. Let's look at the 5 minute, what the 5 minute chart would say on the same time. Again, so on the 5 minute, we lost the 200, had a massive candle, or is it 1139? So you're actually after that. So here is where that would have been, around 1139. And again, I would not have liked that level, because we did not get a confirmation of continued uptrend because of the EMA consolidation here. We ended up getting a close below it once again. And then taking a final look at the 15. And the 15 at that time. And the 15 at that time is just a huge red candle. So yeah, basically, like I said, my thesis, I would not have touched any calls on Google at that time, just because I'm not something I was feeling too much. Hopefully it wasn't too much of a generic answer. I hope I kind of explained my thought process a little well for you, Sloth Bay. Okay. Perfect. Well, one thing I do like that you said you did, you trust your gut, you just got out and just, kept it moving. Can't be mad at that. You manage risk accordingly, and you stop yourself from potentially getting burnt significantly. It would have been nice if it played out the right way, like it did in later afternoon. But always remember, number one rule of trading is to win the trade. Number two rule of trading is protect your capital. And you did just that. You manage your risk accordingly. Now something that, that discipline is something that a lot of traders take too long to learn. So good job on that front. All right. Well, that being said, guys, I've had you on longer than I anticipated tonight. I want to thank you all for joining me and us as a server. I know I actually really enjoy our Monday and Wednesday chats, because I feel like it offers you guys some insight into some of our thought processes, and gives you some insight into ways we think and what we look at when we're looking to enter trades, right? But also, I like the fact that it gives you guys a forum to kind of ask questions in a more direct way, rather than just asking the chat. I know some people may be uncomfortable with that. And I'm glad I'm able to take the time to do so for you guys. So I appreciate you guys joining us. This will be recorded for those who missed it, in case someone came in late. And let's crush it again tomorrow, guys. Really appreciate you guys. Thanks. Also, one thing before you all go, as always, if you guys could, please leave your Discord names in the chat, because we like to take attendance, for those who do join our classes. We do the spin wheel and all that fun stuff. And then if you guys could offer any feedback in the actual server, whether it's, something you like, something you didn't like, something you think I could do a little bit better, something you think, hey, it's doing well, keep it up, or whatever the case is, any feedback is appreciated. Thank you guys all for your time.